Welcome to the Successfully Retired podcast with Hamilton Brandenburg.
Welcome back to another episode. I'm your host, Hamilton Brandenburg, and today I'm going to be interviewing a guest who has experience working in the mortgage industry and probably with one of the mortgage products that is oftentimes very misunderstood. So we've got Jake Droge, and we're going to be talking today about reverse mortgages. And so welcome to the show, Jake.
Thank you, Hamilton. Appreciate it.
It's great to have you, man. You know, I'll tell you up front here, going into this conversation, I would consider myself very like product agnostic when it comes to mortgages. Same can be said for credit cards and anything else, right? There's no such thing as a good or bad product. There's just right and wrong times to use it. So I don't advocate for reverse mortgages, and I also don't speak against them. They're just another tool that clients should consider. And the reason that I wanted you to be on this call, Jake, is because over the years, I have had a lot of clients ask me like, hey, how do reverse mortgages work? Is this something that we should be considering? And so that's just an indication to me that maybe there's a general lack of awareness and a good opportunity to educate our listeners about how reverse mortgages work and who they're a good fit for. I mean, does that sound like a good place to talk? You know, does it sound like a good topic to you?
Yeah, 100% agree. I think a lot of times, people get their information, through a news source, and I always say negativity sells. So go to experts. Like, I'm a certified reverse mortgage professional. There's probably 200 of us in the country. We've gone through specialized training, and I've been doing this for 18 years, and I help people throughout the United States. So that's a great place to start.
That's awesome. So tell us, what is a reverse mortgage?
Reverse mortgage, if you're hearing about the HECM, the home equity conversion mortgage, it's also called the FHA-backed mortgage. It's a reverse mortgage. What it is based on the value of the home, the age of the borrower, and interest rate. There's a formula that FHA has that will lend a percentage of the home value to the people to use how they see fit, which sometimes it's paying off the existing mortgage. Sometimes they own their home free and clear, and they'll use it as a line of credit. They may use it to, if they're up here in the North Country where I'm at, they'll use it to go south in the winter and help cover those costs so they get out of here for the winter season. So a lot of flexibility.
So it's basically a mortgage that can pay off, be applied towards equity of their home, can pay off an existing mortgage, and can allow them to basically borrow against their house. Do they have to make payments on it?
No, there's no payments required on a reverse mortgage. You have to pay the property taxes, insurance, maintain the home just like you would if you had another mortgage or no mortgage. You still have the same requirements.
So who typically qualifies for a reverse mortgage? What does your applicant typically look like who's doing this?
So you have to be 62 to be considered a borrower for the FHA reverse mortgage. There is proprietary products that are for higher home values generally. You can be younger than 62. But what I see for the typical client that I'm seeing, and I work with a lot of veterans, so I'm a veteran myself, but I generally see the borrowers between 65 and 75. Half of them still have a mortgage, and that mortgage balance may be considered small to you or I, 50 to 100,000. But if you're 65 or 75 years of age, that might be a payment for as long as you live in the home, and that's taken away from your cash flow. So most of the time, when we pay off an existing mortgage, the people feel like they just got an increase in their Social Security because it's improved their cash flow. But you don't have to have a mortgage balance to get a reverse. There's a lot of people that own their home free and clear, and they'll set up a line of credit.
So you talked about age is an important factor. Interest rates are a factor. Are there any other factors in how the loan is determined, or is that kind of pretty much the big two ones?
And the appraised value. So those three are the big three things that determine how much is going to be able to be lent.
So a couple questions for you here, and I hear this a lot. What happens if, let's say, somebody gets a reverse mortgage? Do they still own their home? Are they in a situation where they might get evicted while they're still living there? Does anything change compared to having a traditional mortgage and your ownership of the home or the ability of the bank to come and repossess it?
Great question. I'm glad you asked that. Title stays in the individual's name. Just like if you had no mortgage or regular mortgage, it would stay the same. Okay. The eviction, when can somebody get in trouble with a reverse mortgage? It's really just like any other mortgage or no mortgage. Example, you don't pay your property taxes.
Sure.
If you have a traditional loan or a reverse and you don't pay your property taxes, the servicer is going to reach out to you and say, hey, you're in default. You're not paying your property taxes. If you don't have a mortgage at all, I have a case right now where the county is asking for five years of taxes in arrears. If we don't get the reverse mortgage done, they're going to either have to somehow try to fund that 5 years, or that home's going through the foreclosure through the county. So the reverse is really no different. You have to maintain the home as your primary residence and pay those required obligations like taxes and insurance.
So you can't just let trees grow out of the gutters.
No,
and
no.
quit paying your tax bill. It's not just free money. There are no free lunches. So let's ask. So what about costs? With a traditional mortgage, you've got your interest, and everyone's probably seen an amortization chart where, in the beginning you're paying all the interest, and then towards the end you're paying the principal. And I think of a reverse mortgage as, well, being reversed, being opposite, where you're not making the payments, so your loan balance is growing, and hopefully your home value is still growing as well. So let's say if you borrowed half of your home's value, your home's growing, your equity is kind of maybe slowly diminishing. What do interest rates look like compared to interest rates for standard loans?
Right now, I think what a standard loan probably today is right around 6, maybe a little over for a 30-year. The reverse, I generally tell people historically, I've seen it's about 0.5% higher on average.
Okay.
The reason that I've been told, the reason for that, Hamilton, is in a traditional mortgage, once you do the loan, 30 days later, the investors start recapping the return because you're making payments every month. The reverse has no payment, no required payment, so that interest accrues over the life of the loan. So they're carrying that cost longer.
Yeah. So a little riskier for the lender going into the situation. Yeah, that makes sense. Now, what if let's say husband and wife are married. Husband was the one who was on the mortgage. He's 75, wife's 60, and now husband concludes his retirement a little bit earlier than expected. Is grandma going to get kicked out of the house? Like, how does that typically work when you have like a surviving spouse who was not on the mortgage?
So there is, for the FHA program, there is a qualified non-borrowing spouse. So if they do the loan at the time and they're a qualified non-borrowing spouse, which means then that they qualified, they would use her age, even though she's under 62, they would use her age to factor the funds. And then as long as she pays the taxes and insurance, lives in the home as primary residence, she's protected.
So when you say factor the funds, what you might be referring to, correct me if I'm wrong, is how much of the home's value are they willing to lend to the borrowers?
Exactly. So a 75-year-old,
100% of the value if they're charging 6.5% or 7% interest, if home values are growing at 5% because now the bank's upside down, potentially.
Yep. And the other thing to remember is rates go down, these rates go down equally. So if, so they're adjustable. They have a 5% cap above the initial rate, but like I've been doing this 18 years and this is the highest I've ever seen rates. They're starting to come down the last couple of weeks. So hopefully we're headed in the right direction.
One question I get a lot when people are curious about reverse mortgages and asking me questions is, when I conclude my retirement, am I be in a situation where my kids are going to owe some money on my reverse mortgage, or they're going to have to sell the house? Could they be upside down? And if not, if so, how do they handle that? But if not, like, how do they just go through that process if they wanted to inherit the house?
Okay, so let's go first that they're not upside down. The home's worth $500,000. The customers had done a reverse. Their loan balance today is $300,000. So it could be a reverse of $300,000 or a traditional mortgage of $300,000. Home's worth $500,000. The kids want the house. Mom and dad no longer live there as their primary. They've passed away. The kids are going to have to get a loan for $300,000 or pay that off. There might be life insurance where if mom and dad have passed away, they can just take care of that or other assets. It doesn't matter if it's a reverse or a traditional. Now let's go. Mom and dad have lived in this house forever. They did the reverse 25 years ago. The loan balance now is more than the fair market value of the home. So we're just going to inverse those numbers. The home is only worth $300,000, but for some reason the loan balance is $500,000. They had a major depression in the economy. Home values went down a big, some big businesses left the area. I've seen that before of my 18 years. And now you're upside down. And the kids want to keep that house. They can buy it for 95% of the fair market value. So if the appraisal is 300,000, they can buy it for 95% of that value. That difference between the 500,000 loan amount, and I know we're using extreme numbers here,
Sure.
and that 95 is covered by the insurance that's built into the program.
Okay.
HUD currently charges a 2% upfront mortgage insurance premium that goes on the loan balance. That's what covers that shortfall if that ever arose. So great
Gotcha.
question.
Have you ever personally see that happen where a house is upside down because of a reverse mortgage?
Yes.
I'm
Yep.
thinking like outside of 2008, we haven't really had a time when home values contracted. We've had time in the U.S. at least across the U.S. Now, definitely in individual markets, I'm sure that's been the case. But like, have you seen that happen a lot?
Early on, I did. I started in 2007. I worked with
Okay.
a foreclosure department at a major bank. So, these homes were already, people were well behind in payments. So yeah, I did see that. Probably in the last 5 years, the only time I've ever seen it is where the people let the home go in disarray. And it
Gotcha.
had like a major leak in the ceiling, and it's going to be a full rehab pretty much.
Sure.
Yep,
Same kind of things that would happen to you if you had a traditional mortgage. If
exactly.
you let your house fall apart, you're going to lose a lot of
Yep.
value. So you've done a bunch of these. Clearly, you've had a lot more experience directly with these than I have. Tell me, why do you see people consider and choose a reverse mortgage over a traditional mortgage typically? What's driving people towards these products when they decide it's time to consider this?
Cash flow. Most people get to retirement if they're still working or they've already retired. They're probably on a fixed income. When I say fixed income, they might be drawn from an IRA or something, but they don't have
Sure.
unlimited funds.
Sure.
So if we pay off that principal and interest payment, let's say it's $900 a month. Now it's like they can stop taking $900 out of their portfolios, and you look at the life history of that portfolio, it's going to last a whole lot longer than taking out $900 a month. So maybe we need a little extra of that 900 from principal and interest to live on half of that. Well, we drop our withdrawal rate by, you know, half that, even 450. That's an incredible difference. So that's where I see people, they use it for the cash flow part of it. It just makes life easier for them is by far and away the number one reason.
Sure. So playing the devil's advocate, maybe what are some scenarios where you wouldn't consider a reverse mortgage, or I guess you could even say, what are some drawbacks? What are some things that maybe some of the downsides, since there's no free lunches, everything that's good has a downside. What would you say are the
Exactly.
downsides or the reasons you might not want to consider it?
And I put every position, if my mom was in their shoes, would I suggest this or not? So example, one area I would not is my mom plans on moving in the short term. If
Okay.
she's not going to be in that home for more than a year, I would say, Mom, go get a home equity line. It's a whole lot cheaper. There's not the upfront costs that go in on the loan balance day one to the same level. Yeah, you're going to have a payment, but it's only for a short time till you sell it. By far and away, that's probably the biggest thing I see. People aren't sure yet if they're going to stay in their home or not.
Mm,
Some people know they're going to leave within 12 months. Well, I'd be like, now hold off. But some people just aren't sure. Their health right now is in a situation where they don't know if they're going to be able to go back to their home, stay in their home.
sure.
Maybe see if your health improves a little bit before you make that decision, because there are costs, and that's probably
And
one of the things that holds people back.
yeah, I was gonna say that makes sense too, because you talked about, you have 2% up front for mortgage insurance. You probably have closing costs, and then you have a
Yep.
mortgage that is accumulating interest versus going down, which is not the end of the world,
No.
especially depending on a lot of factors. But why would you sit there and let interest accumulate if you thought, I'm going to sell this house in 18 months and move? You're basically just kind of like giving away some of your equity. Whereas if you could afford to
Agreed.
make those payments, keep your equity, and then turn around and move, and then maybe use that for another purpose. That makes a lot of sense. Um, any other final parting thoughts on things that people should consider when they're looking at a reverse mortgage, or common misconceptions?
I would just make sure that you work with somebody that you can trust. I think is key. I always put people in this situation if my mom, and that's very important. Make sure you're working with somebody that you can trust, and involve your children. If your children want to be involved, or your financial advisor, I call it your inner circle, your small circle. Involve them in this process sometimes, because they might bring something up that you or I overlooked, and I'd be like, yeah, I agree. This probably isn't the right solution for you at this time. But
Yep.
most times it's just it's confirmation that what you're doing is the right thing and it's a good fit for you.
I've had a few clients who have considered them. Some of them have gone through and gotten a reverse mortgage. Others have not. And but every time they do, even a lot of times when they're considering a traditional mortgage and they're in retirement and they're looking at moving, I'm like, I want them to involve me in that process as much as they can, as much as they're willing to. I want to be able to sit in on those calls with a lender. I want to be able to review loan documents and amortization schedules and stuff like that. Because to your point, if you
Yeah.
have a team of people who are working for you or people who care for you, like your family, you want to involve them in those important decisions. Because A, we all have blind spots, but B, sometimes it's just good to have a sounding board, right? Somebody to bounce ideas off of. Well, Jake, thank you so much for joining us today.
I really appreciate Hamilton for having me on, and hopefully we can make a difference in people's lives.
I'm sure we can. Thanks so much.
One more thing before you go, you should know that this podcast reflects the personal opinions and viewpoints of myself, your host, and Brandenburg Financial Services. The information that I'm presenting is not a comprehensive analysis of all the topics we're talking about. It's general in nature, and it's not personalized investment advice, so please do not construe it as a recommendation to purchase or sell any particular security or strategy. The views reflected are subject to change at any time without notice, and no representation is made as to the accuracy, completeness, or relevance of the information presented. Guest appearances on this podcast do not represent an endorsement, a level of expertise, recommendation, or any affiliation with Brandenburg Financial Services. This podcast may contain information that could assist you in the development of subsequent discussions with the appropriate professionals and should not be construed as investment, tax, insurance, or legal advice. Therefore, please consult your financial, tax, legal, and insurance professionals regarding your specific situation. Any forecasts or forward-looking statements are based on assumptions and may not materialize and are subject to revision without notice. Past performance is not indicative of future returns. Investment advisory services offered through CS Planning, an SEC-registered investment advisor doing business as Brandenburg Financial Services.